All right, so this is a rehab deal. So this is a property, put an offer in already. Listing agent has provided two inspection reports. There's some issues. Also, walk the property. My offer was a cash deal with fast close. Property has been under contract twice. Seller finance is not an option. The price offered could be a great flip or even a long term hold. Just basic analyzing from beginning to end is what we're going to do on this property. Just I want everybody to know and the ideal exit strategy. So, just some other notes here. Estimated rehab 40 grand, old roof, 2 layers, shingles, possible leaks discovered old and new, possible truss deflection. Issues from weight of shingles. Mold was discovered in the crawl space and had a poorly done waterproofing retrofit, evidence of past remediation. Most tiles in the kitchen are cracked or loose, terrible pet odors. I always love when we walk in a property, Bo. I could tell you how many times I've done this where you go on a property and you like cat urine or something, and you're just, that's just the smell of money, right? Because you generally you get a pretty good deal on a house that has this, right?
Yep.
And that might be a good reason why it's been under contract a couple times, or there was just too much repairs. Qualified buyers, they generally want something they don't have to put more money into, right? Because they generally don't have the extra money to put into it. The deck needs many boards replaced, possible issues with the deck related to the hot tub. How many times have you always hear that, right? The hot tub always has a problem. All right, so the cash offer here, Eric put in was 180. The seller wants closer to 200. So what we're going to do is we're actually going to analyze this deal from an offer standpoint, but I think the key and the most important thing, I think for this property is what is the best exit strategy on this one? And that's really what Eric has been wanting. He wanted to make sure the offer is good, but most importantly, let's go through some exit strategies here. All right, I'm going to flip over real quick. We're going to jump into REI Pro. And happy to say, Eric actually sent an email late last night. The owner accepted the offer, by the way. Now that the offer's accepted for the 180, now we're going to go analyze this deal. Let's make sure this is a good deal for Eric. And Eric was really cool to say, look, you could show the property. I don't care. So if you live in this area, please don't take this deal away from this guy, right? So hurry up and get it under contract. That's the key. I actually pulled a couple of comps here and actually did some filters here. If you don't know, you could come in and filter. This is a single family home, 3 bedroom, 2 bath. This kind of helped narrow. What I like to do, Eric, is on the square foot, I like to really keep it tight because the cost per square foot sold on a property is the number one number that we should look at when we run comps, right? So it's all about square footage. Year built, this is not a big one for me because how many times you go into an area now where a 1910 house is like immaculate and then somebody puts $1 million brand new house right beside it. It just helps increase the value. So how far back? We're going to go 6 months back. If I can't find good comps, I may have to go back longer than that period of time. And then how many comps? You show me up to 20. We're going to go 2 miles. If again, I can narrow this down into just coming a little bit closer to the property. And that's really key when you run comps. You want to make sure that it's similar neighborhoods. There's so many times you could go across the street and the neighborhood is completely different. That comp is may not be a good comp. You can apply these filters. I already have. And these are the comps that came up. Now, this one's tricky. I selected only 2 comps. Generally, I like to get more, but these are pretty good comps out of the selection that was available. There was several, but these 2 here that fit the criteria real tight, and I like to do that. The number one key is the square footage. So the subject property is 1264. My goal, and this is the very first thing that I look at, I look straight down the line like, okay, where's all the 1200s? Because if you take a comp that has a lower square footage, and just assuming all these properties are in tip top shape, but we can verify that. If you have a property with less square footage, the cost per square foot sold is always going to be higher. And I see so many investors, they take all the small properties to
Mhm.
create a bigger value for the property, and then they can't figure out why they can't sell it for that value.
Right, not a good comp.
No, it really isn't. Sometimes you have to take a high comp, take a low comp, and find the average because ultimately that's what we're doing. Now, I'm not talking about amenities and things of that nature because those things will dictate the value of the property as well. But here's the interesting thing, and I'm not going to go through it with you just because we have limited time here. But this Golden Meadow Way property sold for 255. This property was pending at 220 something, 239. It was a lower number. And then all of a sudden it went under contract for 255. Like, hmm, that's strange. How all of a sudden, maybe was it really worth that number? I don't know. But these are the two really good comps. Now, what I'm going to do after I do that, and just so you know, Eric, I think immaculate, perfect, tip top shape could be 271. I think the value is probably a little less than that. Okay. So just keep that in mind. As I go through this offer formula, acquisition costs, and Eric, I am just guessing. You probably know best. This is your area on what the actual closing costs and things of that nature would be in your area. So I'm just guessing. So take that with a grain of salt, adjust those numbers accordingly. Repair expense, you mentioned 40. I do like adding that 10% hedge. So that's additional four. Holding expense only put at 1,000. Just so you know, and I know you can't see it, this house is in actually good shape. The inside pictures of this property looked pretty good. So it looked like in the area looks decent too. So I really think that you could go in a lot of different directions, except one direction, which I'm going to share with you. Holding time, couple of months, you might want to change that. I'm not going to put an agent commission because you'll see why here in a second. Closing cost eventually, again, down the road, any other expenses, again, would go here. At this point, I don't think so. It's actually a pretty good property. My cash offer we're going to recommend is right at there at 176, very close to that 180. Now, maybe you could shave some of these numbers to make it make sense. The big thing is what we call the profit side. So many people forget to put your estimated profit in here. If you don't put your profit in there, your offer's already wrong. You have to put an estimated profit in here. So if I bought it at this price, and if I put 40, if I put these expenses in, I should have 40,000 left. So if you don't put in a profit, I put 15%. If you leave that blank, you would end up paying 216 for the house. So you have to make sure that you put your potential profit in here. Now, you can adjust that as needed. You have to figure out as the investor, man, if I put all this money into this property and the time, effort, and managing contractors, do all this thing, is it worth 40 grand to me? If it's not, you'll have to adjust that. If you're like, Chris, I'll take 25 grand, well, then adjust it. Just don't leave yourself too short because I'm here to tell you, I don't care how many rehabs you've done. You always run into a problem you probably didn't run into before. You think about all the TV shows, all the experts on flip this, flip that house. Every single time they messed up something, right? So keep that in mind. So ultimately, I think your number looks very good. Now, most important thing, what are we going to do with this property? I'm going to show you a couple of scenarios here. You could buy the house, fix it up, and rent the property out. From what I've seen, Eric, it's 1750 as and I'm going to assume that we're not going to have any issues with the tenant during this time. That is pretty good, but it's really not the best. If I go to a different scenario here and actually lease option the property out, I think you could sell it for 275, even though I thought the 271 may be a little high on this. Now you could adjust that accordingly, but that gives you a much greater profit if you were to lease option, hold on to it just for a shorter period of time. Now, if I go up and I think you only have one more scenario. If I were doing this deal and I didn't need the cash out, I think the worst thing you could do is sell it. I don't think I think that 40 could turn into 30 real quick with this property. And if the home was already listed for sale and it didn't sell at those numbers, it's because the home needs work, right? So, or if the seller wanted more, sellers think, oh, well, it's worth this minus this. Somebody should pay me this. No, qualified buyers don't have an extra 40 grand sitting around just to throw in the house and rehab a house for 2 months while they're living in it. Qualified buyers don't do that, especially in this price point. Okay. If you were to seller finance this house, so let's look at it even from a longer term. And I did 6% interest. I think you sell for 275 with 25 down. Somebody that can't go to the bank, but they have cash. 6% for 30 years. Do a 5-year term. Okay. So they're going to make payments to you for 5 years. And then whatever the balance owed on or before the end of 5 years, they would need to refinance the property and eventually cash you out. If you did that, you would make so much more money, by the way. Why do you think the banks have the tallest buildings downtown? It's called interest. They're making interest off of you. So if you go in and do that and do it over now, keep in mind that's over a 5-year period of time. Okay. That's another option for you. I think at the end of the day, when you look at these exit strategies, it's personal. What works best for you in your personal situation? Are you an investor that needs to pull the cash out as quickly as possible so you can do it again? Then maybe you would have to sell it. Are you an investor that says, Chris, I love this area. I think this is a great long-term buy. You may rent it out for 10 years. If you say, maybe I could just wait 12 months because I can make a little bit more money than if I sold it today, then do a lease option. If you really want to make money in interest and not have to worry about being a landlord, tenants, toilets, maintenance costs, headaches, and all that stuff, you would do a seller finance. Because over time, you're going to make pretty good change there, right? So I think it's a personal decision. Now, yes, you should kind of know this before you make the offer of going into any deal. But these are going to be 3 scenarios that I think would fit the property well. And the only one I didn't do was just sell the property straight out. So hopefully that helped a little bit on deciding. And again, it's up to you.